All right. So we have some interesting things happening in the markets right now. We're going to talk about over the weekend. It was kind of announced that we had some pretty big selling last week, and it was kind of discovered that a very large hedge fund, I think it's called Archegos, had a margin call on because they had some positions that totally blew up, certain stocks that totally blew up. And this put, because they had margin call and they were out of funds, this put in certain brokers on the hook. So Credit Suisse and Nomura have gotten hammered over the weekend and overnight futures. And so that's putting pressure on certain stocks, which we're going to talk about. BIDU is one of them because they held fairly large positions in BIDU, Tencent Music Entertainment, and Viacom CBS. So we'll take a look at those today. We do have one also small cap mover on the day. That's, is this one? No. Okay. So we do have one good small cap mover on the day, HGEN, which is up on a positive news catalyst. Remember, when you're day trading stocks, you always want to look for stocks that have like positive news catalysts for the day. If they don't have positive news catalysts for the day, they're not going to attract the volume. They're not going to have as much push through it. So unless there's just like some crazy option flows going on that stock, most likely it's not going to have as much push or just volume and institutional interest. So when you can, always look for stocks that have some sort of positive news catalyst. Sorry, just bringing up something here. Okay, so HGEN has it. They have a positive news catalyst on their phase 3 trial of their drug, which is helping to hospitalize patients for COVID. And 520 patients. So, phase 3, you always have more patients. Phase 1 is usually like 10 or 20. Now that you're phase 3, you have hundreds of patients. So you have a lot more data. And it showed some very positive and effective results. So we're seeing a fair amount of interest in HGEN in the chart, a little bit of a pop on the news, and then it's holding near the highs. So we're going to take a look at HGEN on potential trades for that. 4.1 million volume. Normally volume is about 9 or 90K, 1 million. So it's already 4x the normal volume, 4 times already. So that is going to be interesting. I think it's so far the fact that it's holding highs, I think it's going to provide some opportunities. So we're going to take a look at that. Before we do, let's check in with Spies. There wasn't a whole lot of open interest in terms of calls on Spies over the weekend. So even though Spies popped towards the end of the week, the second half of the week, and closed, right on the high in the rip, we didn't see a lot of overnight futures or calls on in terms of open interest on the SPY. So we didn't see a lot of calls come in, which is kind of interesting as it popped. And yet there's still a fair amount of puts in the market. So with that being said, I think, there's kind of one or two scenarios where I'm expecting low volatility this week for Spies. So if it's low volatility, expect a lot more mean reversion plays, a lot less trending plays. I think it's going to probably grind, not just grind, it's going to slowly chop its way up to 400. And I look for support. Did not mean to widen that. I'm looking for support. I'm kind of looking at Spies more like this right now. Kind of this wide channel. So, it keeps making like highs, then makes, higher lows, new higher highs, new higher lows, but it's not respecting horizontal levels as much. So I think, we could see a grind up to 400. But if we get back down to 387, I think I'm a buyer on Spies at that point. I feel like at that point, I kind of have to be a buyer. So that's kind of looking at Spies. Qs has a lot more volatility. There's a lot more negative positioning in the markets. And for those of my traders that were in the options bootcamp webinar this weekend, there's a lot more negative gamma in the markets. So, or at least in Qs. So I expect a lot more volatility in Qs. So last week, it started off selling, at the 320s. It just couldn't get past the 320s. And this pullback, in my opinion, let's change color on the pen. For the most part, this is impulsive, corrective, impulsive, finds a bid, but it's slowly grinding higher. This is kind of a corrective pullback, and it has flattened out a little bit here. So I think if Qs get back to 320, I'm a seller. I think I'm a seller at that point. I have alerts, as you can see here and here. We just recorded a weekly trade recap. We're doing a weekly trade recap where I'm recapping my trades of the prior week. So the first one's coming out this Monday, this morning. It'll be out probably less than an hour or a couple hours, but it's going to cover all the trades I did last week. One of them was I sold an option play, bearish option play in Qs at around 320. And that one did nice. Not as much as I wanted to, but it did nice. So I think we kind of have a similar scenario that 320 is going to cap gains in the Qs. So that's kind of what I'm looking on that one there. Jeffrey Bankers. Do you represent Jeffrey's Bankers? How do we recognize positive news catalysts? How important must the news be? It's a great question, Jeffrey. So for me, the way I generally classify positive news catalysts, some sort of positive, maybe like a merger. There could be a positive earnings surprise. There's a new contract, with a company, ideally with a bigger company, because if it's a bigger company, then that tends to increase the capital and economic base and just the overall profitability of a smaller company. Anytime a smaller company partners with a bigger company in any sort of fashion, it's good for both companies. The big companies partnering with them because they want something that they have. And the smaller company is getting a huge benefit from working with a bigger company because they have more capital. So those kind of things, anything in biotech, if it's some new patent, phase 1 trial generally is what I would call, it's what I would call mixed results, because in the sense of the results could be good, but it's such a limited amount of data. So when you look at, you start getting to phase 2, phase 3, that increases the probability or certainty to some degree that something solid is coming out of this project. So those are the kinds of positive news catalysts I look for. Yeah. Maybe we'll compile, excuse me, throat allergies this morning. It's more of like a chest allergy. I've been having chest allergies lately. But maybe one day we'll compile a list of, all the different positive news catalysts that we think are things that tend to be triggers. Right now you just have to evaluate the news. This is why we like Benzinga Pro so much, is because you can get news on any stock. We just type in the symbol, find it here, and it'll give us all the news for today. This is all today. So we can kind of look and get some details on it right here. We can look at more details here. So this is why I like them. If you wanted the cheap version, TradingView has a news feed. So I don't find it to be quite as robust as Benzinga Pro. If someone who can afford Benzinga Pro and you're interested, then we'll put a link in below the description to get 20 or 25% off. That's the only way you can get discounts is through affiliates. So we are partners with them. We really enjoy their product, have a great relationship with them, and I only promote products I use or would be using. So, okay. Let's move on. So we know the positive news catalyst on HGEN. Let's take out the stock or check a look at the stock. Just a reminder, on Qs, we're looking to sell around 320. So when I see a stock that's popped, first thing I want to do is mark the pre-market highs. And then I want to check in that kind of pre-market highs with the weekly chart. The weekly chart gives me long-term support and resistance levels. And since we're bullish, we generally have a long bias on stocks. We generally only trade stocks long. We will trade them short sometimes, but the majority of times if we do short a stock, it's through options. You have less margin requirements, less downs, there's less risk for us, so we can control risk much better. So I go to the weekly on this and I see that the pre-market highs actually matches up really well with a prior swing high from back in a couple months ago. Yeah, a month and a half ago, not even. And so this has held resistance since August of last year. We have not been above this pop right here since last year. So, and the market's right now, so it popped overnight to this high, and now it's sitting not too far below that, $1.50 below that. So if it begins to build some pressure here, obviously you're going to have a fair amount of potential orders around 25 being a big round number. If institutions have to or want to sell, they're going to sell, more often around round numbers than anything else. Potential limit orders there. So if we can get past 25, though, we have some room for, 26, kind of 27 resistance here. And then after that, it's going to start getting a little thin. because we haven't been, yeah, I mean, we haven't revisited these prices like past 26, 27. We haven't visited these prices in years. 5 years, roughly. So I think once you start getting into 29 to up to these spike highs here, it's going to be, unless it just continues to build a lot of pressure and volume, it's going to be, you're going to find sellers here. Yeah, it's the kind of position or the resistance where I wouldn't want to overstay my welcome. So I'd want to be quick and lightening up a good portion of my position if I'm still long at this point, if it still makes it to that far. I think it's going to run into a fair amount of resistance though, between 26.32 and 27. This is where I think you're going to find a good portion of the resistance because you have the most amount of price action here, but you can't ignore these right now. So that being said, is there basis support on the weekly? Yeah, there is. It's decent. It's decent. So let's look at intraday charts. So we mark the pre-market highs, see where the resistance level lands. Then once we kind of get an idea of the long-term levels, then we start to look at hey, potential trade ideas for the day. So looking at this here on the 5-minute, that's my preferred day trading time chart or day trading time frame. News came out, pops, a little bit of selling, but holds at VWAP, pops higher, consolidates a little bit, some decent selling. It's probably poor liquidity at this point, but it's holding and maintaining VWAP. It's continuing to holding and maintaining VWAP. So right now, 22, kind of becomes an intraday support. And so far, the fact that it's holding near the highs, if it can continue to reattack, then it's just going to put, I suspect, more and more pressure. If it fades early session, then most of the move is done. And you wouldn't look to long until further down, potentially long until further down, in my opinion. 17, 20, 17 flat kind of thing, where these spike lows match up. But if it continues to build and it hits this prior highs and the rejections get smaller and smaller and smaller, then I'm leaning much more towards a breakout. And so I'd look to potentially trade that breakout. If it hits this resistance and then fades all the way back to VWAP, then you have to look at this more as a corrective structure at the top. Sorry, it's not a straight line. Let's try then you have to look at it more like this and trade more of that structure. So we'll see. If it can't get back up here and it fades back down, then you have to look more towards corrective structure. If it continues to build higher lows and slowly squeeze its way up, then you have to look at breakout structure. Being a corrective structure at the top doesn't mean it might not break out. Not at all. It's still very favorable. Anytime you have an up move with a corrective structure at the top, especially a thin corrective structure that doesn't eat too far into the prior impulsive move. So, this doesn't eat too much into the prior impulsive move. There's still a lot more below it. That's a sign of strength. So that generally leads to the more probable direction being up from my experience, in my opinion. So I'm saying in my opinion, because there are certain legal requirements we have as non-financial advisors. So we'll pull up our disclaimer at the end of this just to make sure that's covered, and also in the link in the video as well. So that's kind of what we're thinking on HGEN. Okay, before we move on to others, let's take a look at some charts. Dave Manny, what do you think of Wycroft? I haven't really spent a whole lot of time studying it. I think there's some validity to it, but I think it leaves a lot to be desired. But nothing wrong with it. Again, I only can talk about things that I've intensely studied. I haven't intensely studied Wyckoff, so it's hard for me to really give an opinion on something. Yeah. Wall ball. Yes, I have some tea here. I have a lemon ginger tea. It's I have a food allergy that causes problems in my chest, so we're working on that. But thank you, though. I appreciate it. Jeffrey Banker saying, thank you. I always have trouble to properly interpret news. Yeah, so hopefully we give you just a relative guide right now. Maybe we'll do a video or an article on it. Yeah, maybe we'll do an article and say, hey, these are all the things that we consider positive news catalysts in the past, and we felt were good, and here's why. So Wallball saying HGEN dilution S3 plus 424 B5 100 million shelf. Copy that. You can say the volume within the corrector structure on the top to find out whether it's breaking up or down. Volume, you can never separate, if you're really trading stocks, you can never separate volume from price action. You shouldn't. So anytime you're analyzing price action, if you have legit volume, which you do in stocks and FX, you don't have legit volume. It's not transparent. It's opaque. And it's a decentralized market. So you don't have legit volume. In stocks, you have legit volume for the most part. And so, yes, first thing is I look at structure first. Then if I like the structure or I don't like if I like the structure and I think it's really bullish or I like the structure, it's really bearish, then I start looking at volume analysis to see, okay, how does that match up with that? So yes, but I always start with structure first because it doesn't matter what the volume looks like. If the structure is not there, the flows are not there. And so you could have a really good, structure inside the volume, but if there's no real good structure on the charts, then you really don't have a way to properly trade it using price action and order flow. So yeah, you can't separate the two, but in some sense I do. I start with price action. If I like what it looks like there and it looks favorable to me and the order flow is positioned in that way, then I start referencing volume to kind of enhance and clarify the picture further. Does the volume kind of match that structure and situation? So very good question. But never volume in enough by itself. Never volume in enough by itself. So yeah. Okay. We're gonna take a look at so some of these stocks that have been hit pretty bad. We have BIDU. Well, let's get those beeps out. TradingView has this thing where if you get one alert to start the day, you have to click on all the other tabs because it's technically activated on all those other tabs. It's a real pain in the butt, but okay. So BIDU, it's had a rough last month and a half. This is when Q started to sell off, and BIDU has definitely suffered from this. However, last week, actually, this is this week, isn't it? No. Yeah, it won't start this week until market open, probably. It shouldn't. Yeah, it shouldn't. So we should be getting a new candle into the market open here. Pretty aggressive selling in BIDU. It definitely found a little bit of a base in 175 and market opened last week at 190. So it went down back up, but this is a pretty big sell-off. So I suspect we're going to have some resistance up ahead on BIDU, maybe 230, maybe 265 plus, maybe on the 280. You might have a potential head and shoulders pattern. And as you all know, as I've talked about many times before, the best entry on the head and shoulders pattern is where? Who remembers the answer to this one? Best entry on a head and shoulders pattern. See if some of my more serious students know the answer. I'm not sure how many of you are in here. I know Sasha could answer it. Nobody wants to answer. Okay. Really? Nobody knows the answer. I'm kind of shocked. Best entry is not a break in the neckline, which is the traditional technical analysis theory. That is not the best entry. The best entry is usually the top right shoulder. The top right shoulder is the best entry. Because if it's going to break the neckline, this is your best pullback. It's also where the order flow. So you got to remember the market after the second bounce has already produced. It's already shown us twice. It's twice. It's already shown us twice where there are buyers in the market. So we know there is support here. That gives us a natural target. The right shoulder usually has, multiple touches. It rolls over. It shows you a lot of its hands saying like, look, we just can't get past that. So the top of the right shoulder is generally your best entry on a head and shoulders. It means that you can target where the neckline is. And if you get a break, then you get a massive continuation. It has the greatest profit potential set up in this. So know that for future reference. This wasn't in the TTM, Constantine. It was in APA. That's why I said longtime members and prior videos I've done. So yeah, So that's the best entry on that. It's not a retest. It's top right shoulder. Yeah. Slow reply on the phone. It's all good, Stefano. It's all good. But there might be potential resistance up here. So we have, 227 we might encounter a fair amount of resistance on that. Trying to see what my notes are on BIDU options. 200 is a major strike. Like the top open interest put as of Friday was 200. So that's right below where we are in the markets. So that means nobody has put strikes, according to the latest open interest reports, below 200. That might recalibrate today. That certainly might recalibrate today. But with that being said, when we look at 200, it actually looks pretty good from a false break perspective. So you can see let's get the pen out. Impulsive, corrective, impulsive, corrective bounce, further selling. But then it, comes back to 200 and retests, finds more sellers, breaks through, but then immediate false break. So it just flushes, make new lows, and then immediately starts to recapture. So it could have overshot its welcome, could have run into a big order, big lot of liquidity there. It's around 175, so close to a round number. But the fact that 3 1 hour candles had reversed 1, 2, 3, 4, 5, about 4 or 5.5 hours of selling, and it did so with gusto, and then is now using 200 as support. There might be some short-term plays. If BIDU does not sell off aggressively and it just slowly corrects into here, if somebody's considering long, and if I'm considering long, this might be a pretty good location. Otherwise, you'd have to wait for a retest of 175 as your next potential long point. If it struggles here and it starts to impulsively sell off, then I would suspect a retest of 175. So upside, I think it's going to have some resistance up till 220 and then 230. How it performs out of the gate, I think, is going to really start to give us the answer. And so if it gets to 200 correctively, you see bids come in pretty strong, time and sales starts to speed up kind of thing, on the level 2, then I would start to look at, potential long plays here with tight stops below. So this is kind of wait and see, but there is some evidence of a potential transition and false break here. So that's kind of what I'm looking at BIDU right now. Whereas the other ones, TME also kind of had a little bit of a bounce off the lows on Friday, but it kind of popped with the market. So TME and 10 Cent Music, that was another place where they had a fair amount of large positions in the Archegos fund. I think TME is going to have some resistance. Long term, it's hard not to be bullish on TME. They have a lot of favorable things. They do have some unfavorable things in terms of regulations potentially coming down the line, as you're seeing with some of these Chinese companies. But yeah, so potential resistance at 24, maybe 25, which is where a base of all this is. What did I have my notes on options positioning? 20 will probably. Wow, there are no open interest put strikes below 25. So there's nobody that's really, as of Friday, there's nobody that's absolutely bearish. Maybe they haven't had time to recalibrate. Maybe they're still digesting the news. And ironically, the top calls, open interest calls, are around 20 strikes. So right about where we are now. So does this kind of make sense? Sort of. That kind of makes a little sense. So maybe it overshot. We definitely did have an overshoot on some markets. Like SPY had an overshoot on Friday when it was opening to the downside and just started selling off. So I think Friday or Thursday, I'm trying to remember. But yeah. I think if somebody was a long-term buyer on TME, I think there's some decent potential value plays, but you're going to want to watch today's open very carefully to see if this sells off aggressively or not. If it sells off aggressively, then it's going to really need to hold this here or hold these lows here. If it breaks that, then you're talking a much further losses, and it's down to, potentially 14, which is right about, yeah, before it finds more players willing to come in. If it rips on the open, then you would want to look for resistance between, just sub 24. Between 24 and 25 would be a pretty fair amount of resistance. Trying to see if there's, yeah, I think it's going to struggle to try and get to 25. And I think if it does, it might find some sellers. That's some aggressive selling in 10-cent music. 32 down to 16, literally a 50% drop. That's pretty brutal. But it might have overshot. So there might be some players that are saying, hey, I'm long-term bullish on it. But yeah, the largest gamma strike, though, is until the monthly expiry for April. So it's literally 3 Fridays out, April 16th. So yeah, that's what I'm looking on TME. And then Viacom. Viacom looks the most bearish of all of them. It hasn't really popped off the lows. So Viacom has had very aggressive selling. 4 weeks ago, it was $100. Now it's at $50, sub 50. So it's dropped 50% in 4 weeks. That's brutal. As we say in the business, you take the stairs up, you take the escalator or elevator down. Sell-offs are always more violent than buy-ups. We've been saying this for 13, 15 years. We've been in business for 14 years. I've been saying it before that, but yeah, sell-offs are always, or not always, sell-offs have the potential based on order flow and how order flow and options flows work to sell off more violently than the moves up. That's how the markets work. So maybe to my option traders, I'll explain that a little later on because there is something to do with option flows when it comes to that. But very, very bearish. That is last week's low. Let's start to look at some intraday charts. Very different than TME. Very, very different. TME had a bounce. What was it? BIDU had a nice bounce. This has no bounce, no liftoff. And you can see the nice impulsive structure corrective, impulsive corrective, black corrector there. Huge impulsive selling on the last day. And we did get a bounce, but it's gone flat. And that's the market open. So it's gone flat. It's gone really flat here. So to me, this is the weakest of all of them. I think 50 is, yeah, I do not think it's a surprise that 50 is held as resistance. Big round number, probably some hedging flows there. Viacom, yeah, doesn't have the largest gamma strike so far as the April 16 expiry. The largest open interest put as of last week, $70. So those puts are hugely in the money. Hugely in the money. And calls is also at 70. It's very interesting. Right now, puts are outweighing calls roughly 600,000 to 450,000. So what is that? It's like 25% more puts than calls. Yeah, not favorable. Not favorable. This one I'm the most bearish on. I think if we get a pop up to 50, I'm probably going to be a seller. I'm probably going to be a seller. May short the stock, may just trade it by options, but I'm most bearish on this one here. Yeah, most bearish on this one. Okay. So Jeffrey Banker, so you're treating pre-market candles as normal price action as if it's happening during the session? Yes. Yes and no. I don't treat them like I know 100% that pre-market is different in terms of liquidity, but you also see a lot of institutional flows very engaged in the pre-market positioning for the market. So yes, I don't discriminate against them in the sense that I don't think they're equal. You can't say they're equal. Liquidity volume's different, but I totally respect them as is. Sometimes you can get some really weird candles in pre-market, and that tells me it's a low liquidity type situation. But yes, I totally respect them 100%. 100%. Without a doubt. If you've watched enough pre-market sessions, and I've watched thousands, you're going to realize that the pre-market levels, price action matters. It's telling you where the institutionals, trust me, if a stock is hot for that day, there's a really, really good chance that the institutionals are very aware of that stock before the market open and are going to start positioning themselves through the pre-market without a doubt. Without a doubt. So there's certain stocks that have had 4 times, 5 times, 10 times their normal average daily volume in the pre-market. How does that happen? It happens because the institutionals are heavily they're heavily, engaged in that stock. You couldn't get that volume from retail traders alone. You couldn't. It just wouldn't happen. So you have to respect pre-market price action without a doubt. There's no way around it. Yeah. Okay. So any last questions before we wrap it up? Oh, just to let y'all know, this week we are doing live pre-market stream Monday through Friday. Monday through Thursday, I haven't decided on Friday. So Monday through Thursday, we are doing it here, same time, same bat channel. So we are going to do that. We'll be here around 6 a.m. Pacific time, 9 a.m. East Coast time, every single day. We haven't decided on Friday. On Friday, this is part of my new trading station, so I want to test it out, give it a spin. Part of this is also we're going to be testing some new streaming software. I'm not really happy with Zoom, as you can see my video. Like for me, when I look at my video, it's 100% clear. And if I'm in a Zoom webinar, it's 100% clear. But when I zoom to YouTube, the video is not as clear. There's a problem. It can't totally sync up the stream rate, the bit rate. So we're going to probably test a new streaming software this Friday. And so if you all want to join us for that, if everything goes well, then we will switch to this new streaming software. So we're still learning it. We still have some bugs to work out on our end, but we're going to use that as a practice session. So we hope to see you that. We'll announce it on the channel if we're going to do it, and then be prepared. So yeah, so that's this week. And then in this week, I'm doing live trade room. We normally have a live trade channel where I'm sharing all my trades in real time. And this week, we're going to do a live trade video room this week. So that's this week, Monday through Thursday for the members. So any last questions before we wrap it up so I can get to live trading? Markets are open. That's when you heard that bell. Let's see what's happening. HGEN. HGEN's so far in corrective structure territory now. BIDU, short term selling off. Okay, so there's the weekly candle. So TME is starting to build. Let's take a look at these, see if they start to go bearish on us. Viacom's pretty weak. How's my HD? My HD is doing great. My HD is doing great. I'm very bullish on HD. We'll talk about this. Our weekly trade recap from last week is going to be coming out every Monday morning. And so that will be probably published in a couple hours. I need to trade, and then I can finally edit the video, just make sure everything's good. Qs, decent start, pressuring the highs. I'm still a seller at 320, and Spies look okay. Good start. Good start. Okay. Any last questions? I'm going to put my disclaimer just in case there are no more questions, and we wrap it up for here. Okay. Doesn't look like we have any questions for today. All right, great. So I'm going to get to live trading with the members. So remember, day trading, swing trading, trading option stocks is risky. I do not recommend trading with live money until you have demonstrated on demo account that you can be not only making money, but that you can be consistent with your behaviors. Because you can be making money in demo, but inconsistent with your behaviors. And that's going to catch up with you. Inconsistent with your behaviors, inconsistent with what you want to mentally execute in the markets. And so if you're inconsistent with your mindset, you will not find consistency in your trading. Consistency in your trading only comes with consistency in your mindset. You have to be able to mentally execute what you want to do. This is not a physical sport where we throw a football. This is a mental performance endeavor. So you have to have your mindset to perform consistently. If it's not there, then you know what you got to work on. You got to wire your brain to be that. But do not trade live money until you have demonstrated both consistency in your mindset and consistency in your trading. That's when you start risking real money in the markets. And you have to show that you can do that first. That's what demo and simulators are for. So don't think trading is easy. Don't confuse a bull market for brains. Trust me, I know. I've done that, and I've seen a lot of traders done that. How many crypto traders in 2017 thought they were geniuses, only to find out in 2018 they weren't geniuses and lost a good portion of their money? I rest my case. Probably a lot. Probably a lot. So never confuse a bull market for brains. The real test of a trader is when things don't go as planned. How well do you manage the situation? How well do you recover, adapt, change your bias, and make money from that? That's the real test of a trader. So with that being said, good luck trading to my YouTube community. If you'd like to join us live, you can check us out at secondskiesforex.com and our trading masterclass. That's the class for my members. Get access to my pre-market live stream every day. We share our top stocks and things that we're going to trade for that day. We share our live trades for them throughout the day. Usually go a lot longer than 10:30 though. So usually I'm going to New York lunch. Video lessons. We have a swing trading channel, live ongoing mentorship, and weekly market analysis. So if you want to join that, check us out. Other than that, good luck trading today. Hit the bid, hit the green, and the like button as well. Appreciate the love and support you guys give us for doing these videos. So good luck trading, and I will see my Trading Masterclass members live very soon.